What is a limited pay policy? Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our EncycloMedia series, we're going to discuss the limited pay policy. Now, I've actually owned limited pay policies. I had insurance through work when I was a teacher in the state of North Carolina. But right at the time that our first son was born, my wife and I were just really trying to make sure that we were making great financial choices and decisions. And we had coverage through work. We were actively contributing to 401ks at our jobs. We were doing all the conventional things, but we went above and beyond, in my opinion. We went to the local insurance agency and we asked to have privately owned policies. We had home insurance, we had car insurance, so we wanted to have privately owned life insurance. When we looked at the products, we liked whole life. We liked the guarantees. We liked that it grew a cash value. We liked that it was going to have that death benefit no matter what. And we were even sold on the idea of only paying for the next 20 years. And then our son would have this and we would have that, and it wouldn't cost us any more out of pocket. Now, I'm not saying that some form of limited pay doesn't make sense for a particular individual. My belief is that every individual situation is different, and yet some things are going to be true. Now, when it comes to owning properly structured whole life policies from mutual companies that pay dividends for the purpose of implementing infinite banking, much like we want to be depositing money in a conventional bank for the rest of our life for the convenience of savings and checking accounts and debit cards, credit cards, etc., to be able to use money, I want the contractual right to be able to pay for my whole life into a private banking entity, the whole life policy. So that's a different level of thinking than thinking, I'm only going to do this for 20 years. And there's actually a page in Nelson's book where he's talking about the differences in products. And on one side of the spectrum, you have term insurance, where for 10, 20, 30 years, you're going to have insurance just for that term, no cash value, no guarantees of access to capital, etc., but you're going to have a death benefit. And almost 99% of those never pay out a death benefit. And then on the other side of the spectrum, you have whole life 121. And I own those types of policies now. Policies where I can pay a premium until I'm 120 years old. Amazing. And I want to. But let's talk about these limited pay. So every insurance company may have its particular products where you have a 10 pay. You have a 20 pay. And that means you are going to pay for 10 years out of pocket and then no more. Pay for 20 years out of pocket and then no more. And then you may have paid up to. So you may pay every year into a policy until you are 65 or until you are 70 or something of that nature. And then you have those 100 policies or those 121 policies where you're going to be paying for your theoretical lifespan. Generally speaking, a limited pay policy is going to build less death benefit, or at least slower, than other whole life policies, such as a 121 policy. The death benefit may be smaller and build more slowly. Also then, inherently, that means that these types of policies, these limited pay policies, may build cash value more quickly than their counterparts. But again, you need to recognize that the volume of premium that you can pay will be greatly diminished because you are inherently limiting yourself to only 10 years of paying, or only 20 years of paying, or only being able to pay up to age 65, let's say, as opposed to having the contractual right to be able to pay a greater volume of premium over a full lifetime and reap all the inherent benefits of doing so. So what I'm saying here is that if you knew that you would experience a constant upward growth trend over time, would you want to limit that? Say the first 10 years, and that's going to look awful. But there you go. Do you want to stunt that constant upward growth trend? Do you know that 10 years from now or 20 years from now or after age 65 that you would not wish to be able to pay more premium to continue to grow the death benefit, to continue to grow your cash value, to be able to continue to impact the dividends that you may receive? Food for thought. So these are some general characteristics of the limited pay policies. And again, I would encourage you to check out page 38 in the book where Nelson is showing these different types of limited pay policies. In fact, I didn't mention the single premium pay. Now, nowadays, with changes in laws, a single pay is always going to be a MEC, a modified endowment contract. To find out more about what a MEC is, I have that video in this EMS, this EncycloMedia series on the channel. Check that out. A single premium pay will become a MEC. And again, that can still be a viable solution for a very particular purpose, even for those that are implementing infinite banking. But when you recognize that you're going to use money for the rest of your life, and that wealth must reside somewhere, and that someone is going to control and profit over the banking function in your life, wouldn't you want to consider you doing that for yourself? So again, remember on this spectrum that term insurance is on the one side and the single premium MEC is on the other side. We want to be able to build as much cash value, relatively speaking, as we can, while still maintaining MEC favorable status, which is not to create a modified endowment contract, while still building a significant cash value style policy, but that allows us to pay the greatest volume of premium over our lifetimes as well. And then a bonus point would be, of course, to be familiar with which riders you may or may not be able to add onto a limited pay policy that you may want. So here's my suggestion. If you're doing the deep dive on this terminology, on these aspects of a properly structured policy and its utilization for infinite banking, make sure to check out this playlist where I'm going over these terms so you can have practicable information to begin infinite banking or to level up your infinite banking. And you can always find me at DurhamTalents.com. Live and leave a lasting legacy. The death benefit may be